Good evening. This is Ken at Tortoise Capital for March 9th, 2019. We're going to take a look at how to generate a list of symbols to prepare for the swing trades ahead and the turbo trades this week. So first thing I notice is markets in sideways quiet. So this is really going to favor intraday turbo swing trading, that I'm not going to be eager to hold positions overnight because of that sideways condition, although the quiet does slightly favor the long side. I'm noticing that the risk Z has pulled from +2 sigma back to the zero line, so this is a critical state on volatility. We could see a sharp bear. We could see a recovery here into long-term swings. So this is volatility at a critical state, market at a critical state. Almost overbought on an annual basis, but very nearly oversold on a 10-day basis. So this is a strong market that has pulled back, and that is why it favors moves of large magnitude in either direction. Theoretical exposure is at 90%, so most of the world is kind of in that condition. You can see why we're in sideways. We're so close to the 200-day moving average. The ADX is slightly favoring the bullish side, as this is the slope of the 50. The risk Z again is above zero line, so it favors risk on, so I have a slight upward bias. But I want to take this one day at a time until I can see some actual genuine recovery. So I'm going to be looking for things that are leaders in this little pullback of this week, the things that have lost the least. So I want strong sectors that have lost the least during the pullback, and then those become candidates for likely resumption if we get some traction from this area. In the ETF2, we're holding Latin America Tech and the Diamonds, so I'll be favoring those sectors and those indexes. Technology, Latin America, Brazil, all doing well. All right, so I'm noticing Latin American treasuries are the blended strength. Sell-off in Latin America was in the yellow. I'm interested in IYR because it's fairly strong and sold off among the least. Real estate and treasuries. The big givebacks were the speculative U.S. indexes. These have been weak anyway, but they lost the most this week. So that could be more of that if there's weakness in the market. So I'll be looking at them on the way down. They may also be value plays on the way back up. Looking at the ETF 32 portfolio, gold shares, utilities. Brazil has had a pullback here from exceptional performance on the 6 and the 3 month. Has had a nice pullback, so maybe there's some value there. Latin America kind of unstable right now, so I'm a little concerned. Defensive play utilities making sense. So this looks more like a flight to quality. Among the Dow 30, this is where I'm looking for these kinds of things. Cisco and GE really jumped out at me. So GE has been great on the blended. Look at this mind split, horrible on the 6, 1, and 1 week, but brilliant on the 3 month, and was a huge seller this last week. So maybe that's an opportunity to buy recovering asset. The other big sellers, Caterpillar and Pfizer, both oversold so much that maybe there's some room to work. So Coke and Pfizer. I'm just going to go ahead and add that. Sector spiders, among the big winners, defensive plays, treasuries, utilities. The big sell-offs, oil and gas, equipment and exploration, also metals and mining had the big sell-off too. So I'll be looking at XME, XCS, XOP, red on the 1 week and 1 month. Again, oversold conditions, looking for some buying quality on on sale. That's my typical catfish type of approach. Under the ETF Max, you see Clean Energy got smacked. The brilliancy here in Palladium, and then a slight give back. So maybe there's more room in Palladium, but that's quite a premium already. Strength in Latin America, and that's just about it. Energy has been really punished. That leads us to those symbols we saw over here, XES and XOPs. That may be overdone. U.S. generally lagging except for the Dow and the NASDAQ, but the S&P's lagging. Latin America, Brazil strong. Under the ETF2, I'm looking at all greens up here in Brazil. Green and white, the SOX and XHB, that's green and white. I kind of like that as the potential strength in this pullback. So if we get some continuation patterns there, that could be good. Market health check here. SPY is pulled back to the Bollinger Band mean, basically a 5DD. You can see the 30 period range box, the 10, and then the 1. So we've got this nice pullback. I'm looking for, I'd like to see an orderly entry in the yellow zone, and then I would buy all the way up. These blue lines are the 1 week monthly, or the Monday openings of last week and the week before, and what we'd seen was that when prices during the week are above Monday's open, that's been very positive, that entire move up. And when prices were below the Monday opening, then that spelled weakness for the rest of the week, and that was true this week, and then also this last week, or 2 weeks ago, and then last week. So I'll be watching the opening closely to see if that gives us a third week down, or is this a pull back to the Bollinger Band mean that gave us the opportunity to replay to the top. I'm looking at a swing target up here around 285. And then these incremental buys, and then you see the price ladder on the way down. I noticed that we've been in the fall now for almost 23 days, so that suggests very tactical. The fact that we are pinching here means that fall is locked in. This additional little weakness comes from the weakness of this last week. So we still have a long side bias here, but we are prepared for tactical short side. And then you can see the price targets on the way down. Diamonds in Latin America, the two strongest sectors are also in overreactions. So this price action Friday may be setting up that good long side trade on the two strongest indices. So I kind of like that. So those will both be on my list. I like these. GE, United Health, CAT, Pfizer, Home Depot, the Max Pains are my go-to. And you can see why. The better than 4-to-1 on all of those, and some RSI2s in here in CAT and Home Depot. CAT a big loser, 10-day and 1-day, so I automatically like that. And the fact that it had a doji on Friday makes Caterpillar a high priority for me there. And that's why it's on this list. Looking at the ETF 30s, lots of RSI2s. Almost everything is in this pullback for the auto framer. 551Ws had the advantage of having a white candle on Friday. XLY it features as a doji and an RSI2. But for me, metals and mining and this oil exploration, how much worse can it be? Well, there's a great big breakdown at minus 44 in the 10-day NDX, so that's sort of a natural play to follow the direction of the price starting early in the morning. So those two are among my primary hybrid frogs. Only treasuries dominating here. Negative Z stretches, Coke, Pfizer, metals and mining. JP Morgan as the super pinch. The most expanded pinch box, KO and United Health, those are extremely wide rivers, and KO also featuring with a big negative stretch, so KO is going to be on my short list as like an oversold candidate. So many to choose from in the auto framer, can't even zero in. But the big sell-off there in mid caps and small caps. There's United Health, Metals, and Mining, so lots to choose from, even in the top 4. Squeezes, I look at McDonald's and McDonald's on 2.5 to 1 from the Dow 30. I'm looking at Coke and Goldman and GE as these the lowest in the recovery here. So the spring went from winter to spring and now has room to grow. So not surprising on those. See the pullback coming back towards the long-term average. That nice measured move, now it's at the long-term average for percent stretch. We're now back into the area where we're no longer extremely extended, so this could actually be, day 1 of this recovery. So we saw strength, pullback, ending in a white candle, and then gains. Strength, pullback, ending in a white candle, gains. So that's the argument for the upside on a technical basis. See this long-term pinch happening where the 30 and price have come back now to the 90, or to the bottom of the river. And now the 30 and the 90 are reaching convergence. This is not, the strength of this market is not oversold. The 90 has just gotten back to the 0 line. All right, that's everything I want to cover on the candidates for lookup. In the quizzes would be to turn these into symbols. I'm going to do that and post that in the chat room for the subscribers to start getting a little zeroing in. But I really want to emphasize these: metals, mining, and energy sector. Coke, Pfizer, GE, Cisco. The overreactions. I'll be following these with hybrid frogs, whichever direction that goes. Any strength in Brazil is automatic entry. Okay, so there we are. Thanks for your kind attention. See you in the chat room.